Well, thank you everybody for joining our third coffee chat that InternDAO has been hosting as part of our interview series. Today we have Redacted Cartel, one of the most interesting projects that I've personally come across and that InternDAO really loves. We've got Sammy and the official Redacted Cartel Twitter with us today to discuss, everything from where Redacted is going to where DeFi is going to all the new mechanisms that people are trialing out. From InternDAO, we've got myself, we've got 0x Liquid Monster, and we've got DCF Intern, who will be asking all of the smart questions that we put together in preparation for this. So with that, I will let 0x Liquid Monster kick it off, give an intro, and then Sammy can give a quick intro, and then Redacted Cartel can give a quick intro.
The,
And
the
then this will be off
redacted
to the
the
races.
redacted Twitter is just me on my other phone.
Well, then Sammy, you'll be talking twice.
Yeah. All right.
I'm just kidding. So Sammy and Liquid Monster, why don't you kick it off?
Thanks, Avi. Welcome, everyone. So just a bit about my background. From traditional, traditionally, I'm a technical product manager, but moving into the PM role at a crypto fund now. DCF intern.
Seems like he's having a bit of tech issue. So Sammy, why don't you go?
Yeah, for sure. Yeah, what's up, everyone? Sammy, one of the co-founders of Redacted. Been in the crypto space for a while now. Mostly focused on like the research and analysis side prior to this. Was working with like a few layer ones, some DAOs, obviously. Most recently, Masari. Then decided it's time to graduate from the analysis side and dive headfirst into the DAO space, launching and building cool stuff.
Awesome. Thanks, Sammy. So it's great to be chatting with you. Redacted is definitely something special. You're building something that doesn't exist in traditional finance, and I'm stoked to be discussing it with you today. So as much as possible, I'm going to try and ask questions that won't get you repeating content you've discussed in prior interviews. So first off, as I understand it, we'll go a bit about you and then move on to Redacted and then to DeFi in general. So as I understand it, you took a bit of an unorthodox route to higher education. You skipped undergrad and went straight to a postgraduate degree. Were you the youngest in your program? And how was the environment like being so young in the program?
Yeah, I actually think, yeah, it was definitely, I don't think I was the youngest one. I think there was like a few other people in my thing. At the time, yeah, like I was originally at like York U here in Toronto, doing like economics and stuff, right? And then when that post grad program for like blockchain development popped up, like Ethereum was in Goblin Town, and no one was really like interested in it. So but at the same time, like I think the people that were interested in it were sort of like around my age, right? So there was like a cool mix. I think there was like a mix of people that were like in web 2, and then like a mix of people that were sort of like in a similar bucket to me. So I'd say like all in all there was like 4 people like my age, but then the rest of it was like probably older people. In terms of how it was, like it was good. It was like definitely like learn a lot of stuff, and it was a good way for me at least to like sort of like break into the industry, because like you meet a lot of the people who helped like make the curriculum. There's a lot of smart like crypto folks in Toronto. There's just like, I think like in Canada is one of those places where like people come up with like really dope ideas and then they just like leave. But the people who helped make the curriculum were like some of the guys who like helped me get my foot into this like space. Um, and then like COVID happened and shit, so it was just moved to online, right? But like while it was in person, it was like pretty dope.
Yeah, that's great. So after you graduated, what did you do between then and starting Redacted? Did you contribute to any other projects?
Yeah. Um, yeah, so like I said, like I think like I got my foot in the door from the space from meeting people who helped write the curriculum and were like teachers at that program, right? So I was kind of like an intern at like a few different places. One of them is like mostly like focused on like the DeFi analysis side, like helping create grants programs and stuff like that. Um, Most probably like the one everyone knows is like sushi, so was helping out with sushi on a few different initiatives. Other than that, like more formal stuff, I think, Conflux, which is like this like layer one out of China project. I was kind of like actually just doing whatever I could, right? Like whenever like an opportunity arose, I sort of like jumped on it. I think that's like a good way for people that are like, maybe new to the space to like also approach things. Not everything is going to be like of the most interest to you, but if an opportunity arises, when DeFi first started, there wasn't all this like DAO tooling and like easy way for you to get connected with like some of the projects that were building cool stuff. So you really had to like get into the grits of things and like dive deep into the Discord and like sort of prove yourself and stuff. Um, so I'd say it was like a mix of like bounty work and then like internships at first, and then I think it didn't get too formal until like the Masari stuff, where I was sort of like helping write like articles and doing like asset profiles and stuff like that.
Awesome. So moving on to how this space just moves so quickly. So we had L1 season, metaverse, NFT season, gaming season, Ohm fork season, V token season. What do you think the next narrative is going to be?
Oh, getting straight into it, eh? What's my take for the next narrative is like immutability governance tokens, which doesn't make any sense like when you say it out loud, but I think like the next shift is like people launching projects that just have no governance whatsoever and are just like systems that just like operate and just exist. I think we're gonna go towards a shift of like complete decentralization. I think like um, if we continue in this like downward trend in DeFi, like I think a lot of the garbage is gonna like filter out, and we'll start to like finally be able to get the spotlight back onto like people who are building like really dope shit. And from what I've like the conversations I've had with like people who are like building like really cool things, I think like one trend that is not a trend yet that like everyone's looking to do is just like eliminate governance and make like completely immutable like DeFi systems. So it might be a bit of a hot take. I think like the easy answer is probably mixing DeFi and metaverse stuff, but yeah, I mean like I'm pretty bullish on like the concept of people launching systems like without governance tokens in general.
Yeah, no, that's fair. I think personally, I think we're still a bit of ways from that, but we'll hop back to the immutability part in a few minutes. So let's dive deep into Redacted, and hopefully all members of the audience today are familiar with Redacted and the benefits of the V token model and curve wars. But for those that aren't familiar, could you please provide a 2-minute summary?
2 minute summary of the curve wars. Yeah. Okay, where do I start? Curve is like this really interesting exchange. Sort of looks like a Honda Civic on the outside, and then on the inside, it's one of the most like complex engines that really is like the driving force behind DeFi, right? Um, I guess like the easiest way to explain it, is like Sushi Swap and some of these other dexes and stuff. They sort of provide um, going beyond just like the algorithm and the way like Curve enforces peg for some stable coins. Other exchanges will provide you rewards for like early stage tokens and ones that are generating volume and sort of let you, kickstart your liquidity. With Curve, they went for a bit of an interesting model where users can essentially, talking a bit on the protocol side here, users can lock up like their vote escrow tokens. Or sorry, users can lock up their CRV tokens. And with the CRV tokens, you enable two things. One is if you lock it up for the full 4-year extent, you get a 2.5x boost on your liquidity provision for whatever pool it is. And the second is you actually get to dictate like where the curve emissions go through this process of a gauge, right? So in different epochs, you're essentially voting as to where the curve emissions for that week are going towards. for a protocol, for a liquidity provider, like obviously it's your best interest to point the rewards to like what you want to get into. But this is like one of the first instances of DAO to DAO interactions in DeFi, right? Curve was able to like crack this nut of like how do we have our governance token have influence beyond our own ecosystem, right? And other protocols started to look at this and say, you know what, like for us, for whatever our interest is, like this makes a lot of sense for us to accumulate as an asset and lock it up and point the Curve rewards to go towards our pool, because Curve is the host of all this liquidity and it's like, the backbone of DeFi. Beyond just like a regular DApp looking to like make their liquidity have more liquidity in their pool, players like Yearn and Staked Out and eventually Convex popped up, which said like there's an opportunity here for us to like boost our rewards on pools that we are like yield farming, right? And lock up this CRV to like increase our revenue for our protocol, right? Um, that led to a lot of like that led to like a lot of like drama, I guess you could say, where people were essentially like trying to farm and dump like as much CRV as possible. I don't blame anyone for that. Like it was a good like opportunity, right? Which sort of led to like the birth of like Convex, which is like the winners of the Curve Wars. What Convex said and essentially was like uh, they created like this CRV wrapper where you can lock up your CRV. They turned it into VE Curve, and then you get back like a liquid wrapper. It doesn't have any like governance power or anything like that, but you get all the benefits of like the boosted APYs and all that sort of stuff. And then the pools that Convex was offering was essentially say like it's boosted Curve rewards, right? So you deposit your LP here, and you get the 2.5x boost, and you get the CRV rewards, and you get extra Convex rewards without you having to like lock up any, or without you having to even own any of the CRV. So that was like like clearly like a winner. They own a majority supply of the CRV. They lock up a majority even now, even till today. Like majority of CRV that gets minted like goes straight to Convex, and they basically just like took over Curve, and they host most of the Curve liquidity. When it got really interesting was, rather recently when protocols like us sort of came into play because Convex enabled voting, right? Um, and Convex essentially said like you can like now lock up your CVX and you can dictate like where the Convex rewards go, and like the with that being said like the Curve rewards underneath it, right? So now it's like protocols are fighting for the Convex because you get to dictate like two assets, right? um, and it's starting to get like even hotter because Convex emissions are about to like slow down significantly, where the Curve emissions are going to go on for years and years and years. um, so protocols are like fighting like very hard right now to own as much CVX as possible, because Convex is essentially going to turn into DeFi's first commodity, where there's barely anything circulating, but it has so much say over like everything in DeFi. um, you might say like I don't need to own Convex because like the Convex emissions are ending, someone else will pop up or whatever, but Convex owns Curve, right? So by you locking up your CVX and you having to say what happens, like this is your only portal to access Curve, right? And even going on beyond then, like they have like this whitelist and all these other like complexities that basically allow it to have like the 2.5x boost and make it a bit harder for other protocols to access that same thing and dictate what happens in the gauge. I'm sure we'll keep on diving into it, but I think that was like a relatively good explanation of where we are today with the Curve Wars.
Yeah, definitely. It's not an easy task to summarize the Curve Wars, but I think you did it pretty well there. So just to double click on that though, the benefits of the VE token model, would you say that the gauge is more important, or being able to lock it for a while and actually be aligned with the protocol is a more important feature?
Yeah, the concept of like conviction voting has been like a topic of discussion in crypto since like Ethereum's early days, right? Um, Back when like they were deciding like back when they were forming the DAO, right? The infamous DAO, like the concept of conviction staking was always at play, right? And there was no way for you to really like there was no protocols who really like cracked that nut. I think like until Curve, right? Where they essentially told people to like put their money where their mouth is, and if you really want to have a say in what happens in governance beyond like like regular DAO votes and stuff, if you want to have a say what actually happens with the mechanics of the protocol and the emissions of it, then you have to lock up your curve, right? So I look at like V tokens as like the way to access like conviction governance in DeFi, um, which is something everyone's wanted for like a long time.
Cool. So let's get into the redacted roadmap a little bit. As I understand it, you're planning to break up the Butterfly token into two different tokens, GL Butterfly and BL Butterfly. So BL Butterfly is the retail product, which gives up meta governance votes for additional revenue. And GL Butterfly is the DAO product, which gives up revenue for governance power. Could you outline all the revenue streams planned for Redacted and how it'll be allocated to either GL Butterfly or BL Butterfly?
Yeah. So I guess like for a bit more context, like Redacted sort of popped up, and I think like when you try to do somewhat radical stuff in the space, like you often have to like learn as you go, right? Um, and one of the clear problems was sort of like, why would I not just buy and lock vanilla CVX? Because I get like, one CVX for the price of one CVX vote for the price of one CVX. And we are trading at this premium. And because of like our projections for like revenue that we're generating for bribes and all these other things, we probably will, the market would probably price in the expected revenue generation into the treasury, which means we will probably trade at a premium for the foreseeable future. And we have this this really cool niche we can tap into, which is essentially like Butterfly can act as like this meta governance token, which allows protocols to like use the Butterfly token to vote on behalf of their self-interests across like a wide variety of things, not just like curve and convex. But there's no way of doing that by just like locking up the Butterfly token now and voting, because we're trading at like 2x or something, I don't know, 3x treasury right now. So by creating like two different locking mechanics and essentially splitting up the Butterfly into two different tranches, we're able to satisfy two different needs, right? Obviously retail, all that matters to them the same way it does for any VE token is like, how much money am I gonna like extract out of this, which is like totally cool. Like that's the industry we play in. So with BL Butterfly, this has been renamed to RL to more fit it. It's called Revenue Locked Butterfly now. Users are essentially like putting their Butterfly in there, and they say like we don't give a shit about like the governance or any of that sort of stuff. Like we just want to make money. So they're putting their Butterfly in there, and they will be accessing the revenue we get from a wide variety of revenue streams, right? One of the ones we've put like a big highlight on just because it's coming up next is Hidden Hand, which I see is like on the agenda, which we'll dive into, but it's essentially like Vodium for any vote escrow token, right? What you have with Hidden Hand is like projects like Ribbon and Balancer, all these guys who are launching vote escrow tokens. Users can essentially lock them up, delegate the voting power to Hidden Hand, and then Hidden Hand acts as like this Vodium, which essentially like aggregates bribes and votes on governance accordingly to like get the most like bribe revenue out of it. Has like a 4% fee, and 2% of it goes to the treasury, and then 2% of it goes to the RL Butterfly lockers. Another thing we're doing is like Racket, which we'll dive into later, but it's essentially like this like perpetual long and short mechanism where users can like long and short Butterfly token, Ohm token, rebase tokens in general, efficiently without risk of liquidation. That has a fee that goes to revenue locked Butterfly. So before I dive into like the governance locked one, I think like one thing that we noticed like since launch was um, a lot of DeFi projects like try to tap into like the pillars of this space to like extract revenue. Like a lot of people make like yield farming on Aave easy, essentially, right? Or they try and like launch a DEX or something and get the revenue to them. When Redacted came out, like it was very clear that like the layer that we were extracting value out of was like this governance layer, which is not really tapped into. And the way you have to move in this industry is kind of like we either tap into that or someone else is going to tap into it. And we have this head start now with the treasury that we have and like the developer talent we've been able to pick up since launch. And we plan to make the most out of it. We are going to make the fundamentals, and we're going to make the core pillars of like governance value in this space. So all these different products, this suite of dApps that we're launching that extracts value out of governance, the revenue that's generated out of that is what's flowing to like the revenue locked butterfly holders. I see we have like most of these things on the agenda, so I won't like tap into them too much because we're talking about something else right now. But yeah, you lock up your tokens into revenue locked butterfly. You say, I don't care about governance. Other people can have that, and we just want the revenue. Then what you have is like all these assets we have in the treasury, right? We have a bunch of CVX in terms of like DAO and CVX. We're like fighting for Badger between like the number 2 spot. Toke, we're moving up like really quickly. I think we're like top 8 now. Frax, we just got the whitelist spot to vote in their gauge, so we have power to like vote on the Frax gauge. And we have all these assets in the treasury. We have like vote swinging amounts of these assets, right? Obviously, like other projects like all want to use this, but they don't necessarily have the treasuries to be able to like make an impact the same way we have. So DAOs can essentially take the butterfly and lock it up into GL butterfly, right? And what that gives you access to is the voting rights to the underlying assets within the treasury, right? So if majority of the market decides that like they want the revenue locked butterfly, which I'm sure it will, and they lock it into there, then what you have is like this 1-to-10 ratio of basically saying like you get like 10x the amount of governance power of the treasury by just locking it into the governance locked one, which makes like voting with butterfly for different assets like more efficient than locking up the vanilla tokens. You feel free to like interject there. I know that was like a bunch of information.
Sorry, I couldn't get off mute there. Yeah, it's sweet to hear that you guys have the whitelisted on Frax now. That's awesome. So just diving it deeper into the numbers a bit. So for simplicity, let's use some arbitrary numbers. Say one butterfly is currently worth $100 today, and I bonded $99 worth of CVX. So now I have one butterfly, and the treasury has increased by $99 worth of CVX. So if I lock it to GL butterfly, how do I calculate how many CVX worth of governance power I would have? And is it just CVX worth of governance power or other assets in the treasury too? Like, how would that be broken apart?
Yeah, I think the better way to look at it is to like take a step back and look at the treasury as a whole. So what you're essentially doing is, beyond the 1-1 aspect, beyond the bonding aspect, if you have your butterfly and you want to access the governance lock power, and 10% of supply is locked up into there, and we have $100 million in the treasury or something, right? Of CVX, FXS, Toke, etc. And let's use the example of like Vault here, because I talked with Vault yesterday and I think they're really dope. Vault is like a new, like, unpegged stable, whatever. They can explain it better than I can. Vault, wants a Toke reactor. Vault wants convex rewards on the thing. Vault wants to be in the Frax gauge. Vault wants to do a whole bunch of different things. They want a ribbon Vault. They want Olympus Pro bonds. They want what everyone wants in this space. And, to them, instead of going out and acquiring all these different assets and making those different initiatives, for them, it's more simple to simply buy Butterfly, lock it up in the governance locked, which is why I label it as like a DAO facing product. Lock it up into governance locked Butterfly, and then they have access to the governance power of all of those assets at like the 10x boost on assumption that like it's a 9-to-1 ratio split of like where the butterfly is locked, right? So for $100 million of governance power, they're essentially getting it for like like with 10 mil, like $1 of butterfly equals like $10 of governance votes across all those assets, right? And if they want just like the CVX, then they would have to make the calculation of what the current CVX holding is. Again, even at a 9-to-1 ratio, like they're still getting at the way the current treasury is set up, like three convex votes for the price of one.
Okay. So since I locked it into the GL butterfly, does that mean that the new CVX added to the treasury won't increase revenues distributed to BL butterfly holders? Because like if it's 10-to-1, how much of that 100 million is then used to be able to sell for bribes, if you will, or rent out for bribes.
Yeah, none of it, right? None of it. That's why it's like, well, okay, I think I said this before, like we have to change the comms and stuff. Like it's revenue locked Butterfly now, right? So there's two sides like of the DApp in that sense, right? The treasury, like, if we'll use Vault again in this example, is Vault is voting for themselves. There is no bribes, right? Think of like how Badger plays the Convex game. Badger owns the Convex and they vote for themselves. There is no bribes involved, right? So in that sense, like the treasury, beyond like, like obviously there's like a APY that's generated through like locking up Convex, and there's an APY that's generated by like putting your token into different reactors and stuff. You get access to that, obviously, right? Like, the revenue that the treasury is generating. But on the bribe layer, that essentially gets deprecated for this transition to letting DAOs like access the votes themselves, right? So you are getting the appreciation of the treasury, one through the value accrual mechanism that's sort of like built into this whole thing of like the underlying value of the treasury compared to the circulating supply of Butterfly, and all the other dApps that we're launching. So like Hidden Hand, Racket, and then like, Demev and some others, right? So you're essentially tapping into the revenue of that stuff that we're launching that sort of like plays in off of the treasury also.
Got it. So is 100% of, so some percentage, I think you said 2% goes to the treasury of the Hidden Hand revenue. Is the rest allocated to RL Butterfly holders?
Yeah, exactly. So we're working on like the like Arbitrum deployment of it now, because there's going to be a ton of tokens sort of like flowing in, right? And we're not really in the business of like, just dumping them and buying back Butterfly or whatever. So what essentially, like, you'd be locking up your Butterfly into the revenue lock Butterfly. All the revenue that's getting accrued from like Hidden Hand or whatever is like sent to like the Arbitrum like instance of your address.
Okay, got it. So one of the problems having OM as a liquidity pair is that during volatile times, it can take down Butterfly with it. And in response to that, the team came up with Racket. So as I understand it, Racket allows each Butterfly holder or any holder of any rebase asset in the Butterfly treasury to either 9-9, i.e. leverage long or short the token, which is essentially switching to a stablecoin-like position. Could you explain the mechanics behind it and the vision around the user experience?
Behind Racket.
That's right.
Yeah, Racket. So so everyone, like, like right now, I guess like this sort of vertical that we're trying to play in, I think like obviously, we have like our implementation of it. We see like the value of PCV for different things than Olympus sees it. And we're like a close partner of like Olympus. We didn't want to like, yeah, like, we didn't really launch this thing to like flip Olympus or whatever. Like, we told them from day one, like, we want to do this with you guys. They sort of like saw the vision, and like we act as like the sub DAO to Olympus. One of the things that we're doing is like helping their narrative of making Ohm a reserve currency, and we launched the token with a base pair of Ohm Butterfly. And then Ohm did what it did. It was not like, like there was obviously like a market downturn, and there was these like cascading liquidations, and then, oh my God, why did Shada sell? And then all this sort of stuff, right? And like dropped in price significantly. And because we are paired against them in a sushi pool that's 50-50, like, even without people selling, the price of the token is just dropping, right? So, like, I think like Fuse is like a really dope tool. I think like, in general, it was like the market that was wrong, for like, leveraging up the way they did. And I don't think anyone sort of foresaw like what could have happened, like with these own liquidations and stuff. But what comes with that is like the opportunity to capture more market share for us, right? Instead of like, dwelling about it and like, realizing everyone's just going to get back into Fuse eventually, like as Ohm comes back to life. um, we're going to propose like a new sort of model for people to like safely leverage, or safely like lever long or lever short on Ohm and Butterfly and eventually other assets, right? And that this is what Racket is, right? So Racket is sort of our way of helping the general Ohm economy. um, what do they call it? Economy, whatever. And like, providing this like leverage long or leverage short position. So, the quickest way to describe it is like in tumulus like market conditions, like investors could like seek to dump like riskier assets for stable coins, right? However, like what happens is this causes like the price to drop sharply as like the liquidity dries up. So when you create like a permissionless shared long or soft, um like a shared long using like a soft pegged short position stable pool, right? So we can create like a liquidation free alternative to 99 and -9, -9, by basically creating like these derivative assets, rack and ket, hence racket. Um, it's pegged. It has like a soft peg to the Frax price index, which is launching like really soon, and it uses like a gauge similar to those that like you're probably all familiar with to control like index weights. Um, okay, does that explain it well? Because it's like still like a work in progress. Um, it's like currently getting like a economic audit from like Gauntlet and stuff, but this is like how we're sort of approaching it. I know it's like a very complicated for those who like don't necessarily understand like perps and stuff like that.
So maybe talking about perps, how is it different from perps?
Okay, I guess it's not too different from perps. It the way it uses it is like instead of like creating a lending and borrowing market, which trades against like which liquidates against the open market, leveraging like the treasury that we have, Olympus and us, we can create these like derivative products directly from the treasury, right? Using stuff like FPI and creating these soft pegs within the market, um, which essentially allow us as a DAO to introduce soft leverage and soft shorts into the market, which liquidate against our treasury, meaning that like Ohm and Butterfly don't feel the effects of like open selling on the market come time for liquidations. So the same way that like the Olympus proposed this notion of like a DAO owning its liquidity instead of renting it, we are going to start owning our leverage and owning our debt that the users are taking out rather than letting them control it on the open market.
Okay, and I guess,
Protocol owned debt. I'll call it that. POD.
and so that's why users would be able to stake the racket index. Is that right? So when you stake the racket index, you kind of
Yeah,
take the other side of that bet.
yeah, exactly. That's sort of like the stability mechanism and how it keeps its soft peg, right? So that comes more down to like the mechanics of the tokens and how they act as the leverage, right? But yeah, like essentially, you can stake them to sort of like it works similar to like Liquidy's stability mechanism, if anyone's familiar.
Is that any similar to how GLP works for GMX protocol?
Yeah, I'm gonna sound really stupid right now and say like I haven't had the time to familiarize myself with GMX.
I don't know if stupid's the right word there, but fair enough. How will usage of Racket affect redacted protocol revenue?
Yeah, so liquidations are like a very frothy thing, right? And in general, like there's a lot of fees tied to like opening shorts and longs on projects within the space, not only from like the price appreciation point, but the underlying issuer has like a lot of upside in these sort of things, right? Um, so by making it a market that we own and we issue, we can accrue fees from not only like these soft liquidations we're calling them, but also from like the minting and burning of these tokens, right? Which is done in the native asset, which again like flows to like the revenue lock butterfly lockers.
So to double
The
back,
fee mechanism, like it's not a fixed fee, right? Like the in order to maintain the peg, the fees sort of like can deviate anywhere between 0.5% to 2%, um, to make sure that we can enforce like current market conditions to to make sure that we can like weather like market conditions and make sure that um, we can like handle like mass liquidation events.
I'm not sure if I fully understood everything there because it definitely seems like a complicated product. So if I wanted to take the other side of everyone 9-9ing, that's when I would be staking the racket index. Is that right?
Mm, No. So like you would find the like further incentives by locking up like the rack token, for example, or staking the rack token, that enforces like the stability of the peg, right? There's two different tokens in it, right? Like there's the RAC token and there's the KET token, right? The KET acts as the short and the RAC acts as the long.
Okay. We have a lot of different questions to cover here, so I'm going to move on. One problem many people are aware of regarding Ohm is the dilution to stakers due to bond discounts. And one of the solutions being discussed in the DAO is to move away from bonding and instead leverage a variation of the Harburger tax. So how is user-determined discounts any different from bonds? Is the main difference just the roadmap to immutability, or are there other advantages there?
Yeah, there's two, right? So um I guess like one is like, but this path to immutability, the way it works for like Olympus and all its sort of like fork projects around it, is there's like essentially like a policy team managing what they call the BCV, right? The bond control variable, which is like a DAO, not even a DAO determined thing. It is like truth be told, it is a very centralized process of like, protocols essentially deciding how much we want to own of one asset, and can manage different levers behind the scenes, sort of allowing them to like, increase discounts or lower discounts accordingly, right? um, and you know one, we like all projects, like we want to be more decentralized, more than decentralized. We want to like have no control over the system at all, and just let it exist, right? um, but secondly, I think like there's uh, this like interesting like PvP nature like of DeFi, right? Which Harbinger taxes sort of address, and instead of like trying to hide it, like I think like we can embrace it and use it to our advantage. um, so like leveraging like the Harbinger tax model, what you're essentially doing is you have a fixed amount of butterfly going out, right? This is like all in transition to the V2, where there's like a fixed supply and stuff like that, and there's a predetermined amount of butterfly entering the market for one of these pulses. Uh, so let's say there's 100 butterfly going out in this pulse. Everyone knows there's 100 butterfly going out in this pulse. What you're essentially doing is like users are fighting over the Harbinger tax that they're paying to own that 100 butterfly that's going to be emitted, right? So the user determined discount is essentially like the open market deciding how much they are willing to burn in order to get that butterfly. And the discounts are basically working down from 100% discount all the way down to like a 0% discount, and potentially even negative, right? If you imagine there's going to be upside after the pulse. So yeah, does that answer your question or not really?
No, I think it does. But just to clarify then, I guess the underlying assumption here is that the Harburger tax would end up with less dilution to stakers than ohm bonding. Would you agree with that?
Well, I think in general, just moving to a cap supply and being able to forecast the emissions that are going out, right? It already like helps the dilution problem, because like users are able to like determine how much is entering the market, right? Um, I think like in this sort of model, like dilution is a problem for all DeFi projects, right? Not necessarily just on like most projects like operate in the red, in the sense that like emissions are going out at a much bigger rate than the value being accrued to the underlying token, or people that are staking it, or even worse, locking it for lengthy periods of time. Um, I think like the reason people put such a big highlight on ohm dilution is because there's not necessarily a way for anyone to forecast how much ohm is entering the market at X date, right? Um, so in this like transition to, I guess, like a more like traditional mechanism of saying like X amount of butterflies entering the market at this specific date, you're able to at least like forecast what's entering the market. And then I think that's in general just like a problem the whole industry has to address, in the sense of like you know being able to bring emissions down to a more conservative rate, where dilution isn't such a concern.
Yeah, definitely. I mean, transparent emissions and on a particular schedule will definitely help with, folks looking to value it. But I guess just to circle back on the question, it should end up with less dilution, right? That's the whole point of introducing this, correct?
It should end up with market determined dilution, not DAO, not centralized dilution, right? Or rather, like, market play dilution. There's a lot of like bots that play these like bonding games and stuff like that. And in terms of like extreme volatility, which we will probably witness for the rest of the year, there's no real way for us to like really even say like what the dilution is, because there'll be like a block where the discount could be 15%, and then at one point like someone can bond X amount of CVX, and then that goes to like zero basically, right? So by us like making this transition to putting fixed amount of dilution out there, we're able to like further like manage the fees of stuff like Racket and Hidden Hand to make sure that the revenue we're generating always outweighs the emissions that are entering the market, which eliminates the issue of dilution in the first place.
Yeah, that makes a lot of sense. So in a previous interview, it was mentioned that this Harburger tax system levers Butterfly's TVL versus the old bonding mechanism. Could you please elaborate on how it would lever the TVL?
Yeah. Um, so with a model like this, right, I think we're starting to see it more with like fixed rate interest and stuff like that. Like, people, again, like I think the whole industry just getting smarter and starting to realize like, fixed deposits are probably a more sustainable way to operate these kind of markets than, variable rate interest. Which means with Racket, we're probably going to fall into the same path. But after we move away from like just Ohm as like the beta product and get into other assets, like introducing soft leverage and safe leverage on assets like CVX and CRV and assets of interest to us. What that is essentially saying is like, if you use the deposits to CVX for like 16 weeks, let's use that perfect number, 16 weeks, the DAO can get the governance power of that CVX while it's locked up. So if someone locks it up and they get like, the RAC token and they have like a lot levered long on CVX, the DAO is able to still leverage the governance power of the CVX that's deposited there, and sort of acts as like this sidecar to the treasury, which gives governance locked Butterfly holders even more governance power than before. So we can basically extract as much governance power out of all the out of everything that's coming into the system as possible, right? So the CVX and CRV and all these different things still have the governance power for the GL Butterfly lockers, while their levered long is like circulating in the market.
So the leverage really comes from Racket, not from the Harburger tax. Or did I misunderstand that?
Yeah, that's a Racket thing, right? Like Harbinger taxes is an evolution of bonding per se.
Okay. Yeah, no, that makes sense. So we've had so much innovation in DeFi, and Redacted itself is just doing so many different things. And so there's kind of the issue of how exactly do you value protocols, right? And each protocol, I think, does it a bit differently. So how would the Redacted team, like investors of Butterfly, to value the token? I.e., like what metrics should investors use? So for example, right, stablecoin protocols may ask its investors to look at protocol revenue per stablecoin issued and absolute number of stablecoins issued, for example. You're on mute, Sami.
Oh shit, my bad. Okay, what I was saying was like, yeah, I think like this is like a problem like the whole industry faces, like all the way down to Bitcoin, right? Like no one really knows like how to value these things. I think like again we're going for something like a bit radical here, and while I think like RFV serves its purpose for different mechanics of the protocol, I think like RFV in our case would be the thing that like most people point to, right? Which is essentially like what is the underlying value in the treasury. But RFV is a flawed metric, especially in our case, because that is not risk-free value whatsoever. That is risk on value, right? And it's not like it's even liquid anyways, you know, like you can't just like take the CVX and like, you know, like get access to, even with OM, like, you know, it's not like there's no way of enforcing a peg because like the assets like live within the treasury and they never exit, right? So it's not like a stable coin. So I think like, you know, the current answer for a lot of people, like I guess like how to value Butterfly would be like the risk-free value. But then like, you know, in our case, like there's a whole bunch of like issues that pop up around that. I think like I want to eventually look at our project like more like how a TradFi company looks at it and look at the fundamentals, how much revenue you're generating, how much value flows per token per year, all that sort of stuff. But I think like in the long term, one thing that would be like so dope to me is if like, you know, eventually we find this market equilibrium and people start to value Butterfly token. It What is the underlying governance power that this token has across the whole space, which is not a measurable metric whatsoever at all, right? But I think like, you know, the end goal, like at least for me, would be for the market to end up like pricing the token based on, you know, how much like CVX votes, CRV votes, Toki votes, all that sort of stuff that it has, and the influence that it has over like the whole space. I know that wasn't the answer you're looking for, but that's the answer I'm giving.
No, I mean that makes sense, and it's I guess becomes even more difficult now that, you know, the token is going to be split up into GL and RL Butterfly.
Which makes for like this like interesting problem because like like I said, like one is a DAO facing product and the other one's a retail facing product, which means that there's two different players at stake valuing the token for different requirements, right?
Yeah.
The GL Butterfly holders are valuing it at what I just said, like what is the underlying governance power that this holds, and the revenue lock Butterfly holders are valuing it at a more traditional state, essentially looking at like what is the value accrual per token that we're getting like out of this project.
Yeah, definitely. Would definitely like to see, you know, that like I guess for all of DeFi, it being more clear on how each protocol wants its holders to value it, so that, you know, the market gets more efficient in valuing these tokens. But it's not an easy problem to solve. Looks like we have DCF intern here as well. DCF intern, why don't you give a bit of an introduction on yourself and go and start with some questions on your end.
Yeah, sure. Thanks, Liquid Monsters. Sorry about being late, guys. Had some tech issues. Just a quick fact about me. I joined the space late last year, pretty much, and my first kind of foray into DeFi and the whole space was through DCF. I was doing some like freelance research and writing for some news outlets, but yeah, basically got my start with DCF. And I guess we could just kind of dive straight into the questions, Sammy. We have a few more questions around Redacted, and we'll just talk generally about DeFi, and then go into some audience Q&A. So the first question that I had for you was, so you were talking about backing and risk-free value and whatnot. And recently, Olympus has been looking for like a way to, you know, enforce like or defend their backing through their inverse bonds. But, you know, looking at your governance form, you guys are not choosing to do that. You guys aren't going down that route. And the mechanism that you guys chose to defend backing was to choose or to have dynamic emission rates, where when the spot price of Butterfly, correct me if I'm wrong, if it goes below 25% of the backing per token for an epoch or 8 hours, then you guys would reduce the staking emissions linearly over like a week. But do you think, so I was looking at this and I was wondering, like, do you think this mechanism is like maybe too reliant on market participants being like rational? Do you think there could be like a sell-off, you know, prompted by the reduction in the reward rate, which is kind of what happened with Olympus, right?
Yeah, it is definitely right. And personally, like I'm of the opinion that like we should like not even try to like enforce any sort of peg, because peg is a made up number in a lot of these projects, right? Especially for us, like more than anyone, for us, like, you know, there's no such thing as a peg. Like treasury for us like acts as like any other DeFi protocol treasury in a weird way, right? There's no underlying collateral to the token, right? That doesn't exist for any of these things, right? And I think like that was because it was like so new, and it was because kind of like a radical concept at the time for Ohm. That was kind of like what people pointed to, and Olympus is trying to like navigate away from this notion of RFV at the same time, right? Where is I going with this? Yeah, I like that mechanism that we have in play is sort of just like a short-term stabilization mechanism that we have to make sure that the staking APY reduction goes smoothly, and that it can like swiftly react to any market conditions, right? In general, like going into V2, and honestly, the vision from day one has sort of been to just like completely dissolve this notion of risk-free value and backing per token, because it doesn't exist for anyone. There's no such thing as backing per token unless you're a stable coin and you can actually give someone that backing back. There's a lot of projects that like failed, I guess, like in our vertical, for whatever reason, and they've in their world they dropped below backing per token. If we drop below backing per token, like short answer is like we're not going to do anything. Like we know what we're building, and like we're confident in the product that like we're putting out there, and we know like where we're deriving value out of, and it's not the backing per token, right? So right now, let me look. Right now we're trading, I guess, like if we were to look at it from a Wonderland perspective or like an own perspective, we're trading, I guess, 3x above treasury, right? Which means like the value of Butterfly, if we were to compare it to like another own fork, is 3x overvalued, right? But I think like in general, like we've been able to like filter in a lot of like experienced market participants who sort of see things the same way as us and realize that this is not the right way to like value the token. And I think like a lot of people understand when I say that like if we ever do drop below the backing per token, like we're not gonna enforce it whatsoever, because we know where we're deriving value. And actually, like in the case of like GL Butterfly, for example, or RL, because of like the markets that we're tapping into, actually the most bullish thing that can happen is if it does drop below backing, because then you're getting like 10 CVX votes for the price of one or something, right? So yeah.
Yeah, I think that's an awesome answer. And I guess kind of going back to Liquid Monster's question earlier, where the treasury assets or the protocol controlled value doesn't really tell the full story. But sorry, I don't want to kind of like repeat the question, but I was curious and I was meaning to ask you this. Do you think there's like a quantifiable like measure of kind of like the governance power that each Butterfly like holds in Convex and other tokens?
Yeah, so I don't have any numbers on me right now, but I guess like a quick and easy way to answer your question would be like, what is the like when you incorporate aspects of like boosts and vote lock, like for example, like we know we get more frax voting power per frax because ours is locked for like 4 years, for example, right? So I guess like ours would be looking at like how many frax votes, convex votes, toke votes, CVX votes, etc. Do you get for like one Butterfly, for example, compared to like locking the vanilla tokens up?
Right, totally. I think that pretty much answers the question for that. And I guess another thing that I was wondering was, thin liquidity, shallow liquidity has been a point of concern and an issue for Butterfly. And you guys are migrating to Curve V2 and eventually the Tripool with Ohm and Eve, which should theoretically address bulk of these issues. But with the Curve liquidity, I think it was sitting at like 4 million right now. Like, is that the ideal figure that you guys are targeting for now, or do you expect you guys to add more liquidity later on?
No, 100%. We're adding more liquidity. There's a KPI internally to have 20% liquidity to the market cap, which right now we're at 11%. So yeah, I mean, there's a goal to like get it up to like 20% of like the market cap, like at all times, right? Which is like very hard to do in Ohm's case, for example, because we actually like started building like a ton of liquidity. At one point, we were at like 25% liquidity to market cap, and then the drawdown happened, and you can't build that back because the underlying value of the liquidity pool was lost through rebases and market deprecation, right? So I think like transitioning to like ETH and stables and like the normal stuff in this case is probably like the smarter play, because we can probably like hit that KPI and like sustain it, right? Because we owned all the liquidity again, right? So I think like, with the curve pool, it's helping that mission. With the tri pool, it's more just a thing of like trading efficiency and helping the underlying issue of liquidity, which is that the fact that like the butterfly and the LP is getting rebased. And we have some other cool stuff with like Frax and whatnot that we're launching. So all in all, like, I think like if we can hit that like, target of like 20% liquidity to market cap, then we should be in a really good spot to like not be having like these like fucking 30% swings every day. And it should help like the centralized exchange like part as well.
Yeah, for sure. And another question that I had regarding, I think it was under the same proposal. You guys said that you guys were going to mint the butterfly for the LP, right? Which would effectively dilute the holders. And I'm pretty sure that you guys would have enough butterfly in your DAO wallet. Was there like a specific reason for this?
Actually, we don't. Like, actually, like, it's funny. The one asset that we have like the least amount of is butterfly in the treasury. Well, not like compared to like the bribes and stuff like that, but like compared to like the assets of interest, CVX, CRV, and stuff, like the one we own the least of is butterfly. So the reason we're doing that, right, is we could have just launched like LP bonds for that curve pool, for example, but then it comes back to that issue that we were talking about before, where it comes down to this like underlying problem with the whole space in general, where there's like unforeseen or unforecastable dilution with making like these LP bonds. And we want these we want this liquidity pool to be like really thick, right? So what we're essentially doing is like, instead of launching liquidity pool bonds and depending on the greater market to like let that liquidity flow to us, what we're going to be doing is keeping the ETH bonds on, and then every ETH that gets like minted, we'll be matching it with butterfly instead of doing the liquidity pool bonds in general. So it's like more of like fixed dilution than it would be like unpredictable dilution. And then once the LP bond reaches like the internal threshold, then it'll get turned off.
Cool. Yeah, just moving on. The question was from one of the other InternDAO members, and he was just wondering, for other DAOs and projects looking to partner with Redacted, like what are some things that you look for, and specifically, I guess, outside of maybe the curve wars.
I guess it depends like what the protocol is trying to do. But, we're a pretty like flexible type of project. Like I said, like I think there's like now 2 layers to DeFi being built. Like one is like the regular DeFi Aves and Urins of the world and stuff like that, and then there's this sort of like layer that we're trying to establish of like this like governance extractable value, right? And I guess in that sense, like we can generally partner with anyone, right? So not to bring up Vault again, but just because like they're on my mind, but like for Vault, for example, like there's a bunch of stuff we can do. Like for example, they're obviously going to want to make Vault like super liquid on Convex. So then there's options of, until we get to V2, obviously, like options of like OTC bribes and stuff like that to help get them more liquid. It's a way for us to like pull in assets into the treasury more efficiently and more predictable. And then I guess like there's other ones like, like Hidden Hand, for example. Like if you're launching a Vote Escrow token, like even if you don't partner with us, so they're probably just going to do it anyways. So like I mean there's a bunch of different ways, right? Like I think if you like believe in if you have like the same conviction in like this layer of DeFi that we do, and everyone has governance the same way we do, then there's ways to like partner on a variety of different funds, going all the way from like bonding the asset, which would be the most extreme one, down to just like a Hidden Hand integration, for example.
Right. Sorry, I should have probably asked you this earlier, but I mean, I guess for me, the expansion for Redacted into or partnerships with Dopex, Frax, and your seed investments in Curvents, like those make sense. But is there like a particular reason for, Market
Okay.
XYZ or Jones DAO?
Okay. Yeah. Okay, I get the issue. Yeah. So, for example, like the decision to branch away from just the curve wars, I think that was like an issue of dependency on one market, for example. So looking out, like we are like probably going to bond assets that will have influence again outside of their own ecosystem, and assets that we know other projects like really want to be a part of. Example, Toke when they start working, and Dopex, right? At Frax, for example. And then I guess like the second part of your question was the seed investments, right? So the seed investments, truth be told, are like more a thing of like market signaling than anything, right? I think like one thing that's really important in this industry, like as you try to establish yourself, is like telling, like making sure the world knows that like you're a legit project, and like projects want to work with you before they want to work with others. And the fact that we're like leading the round or co-leading the round for like a lot of these projects that have like very hot a lot of VCs wanted to get into Jones DAO, a lot of VCs wanted to get into Curvents, and the fact that they're coming to us and saying like we want you to own our token supply says a lot to the market in the grand scheme of things, right? Obviously we're going to make like a ton of money on that stuff, and like I mean, this is just how like seed rounds go and stuff. Like it's obvious like from a financial perspective that it's a no-brainer. Jones DAO is like a way for us to like get more entwined with the Dopex ecosystem. Curvents is a way for us to like keep building on the Curve and Convex narrative. But the truth of it is like it's a market signaling thing, right? Like it shows the market that like Curvents is a great example of this. Like Curvents kind of needs to work with us if they want to make their Convex initiatives like a thing, right? Like they sort of need to partner with us, which is I think like speaks like very loudly to the market if you view it the same way we do.
Oh yeah, for sure. Sorry if I put you on the spot. I was just wondering because, I was looking at your governance form, and there was a proposal for changing like the delegation process on Votium, where you guys want to take all your like bribe rewards, or sorry, just rewards, and pretty much excel all that and allocate that into Convex and Frax and whatnot, right? So 30% of the bribes, it's like Alchemex, Spell, and Origin token, like those aren't like too important for like Redacted. And the proposal was talking about, hey, we should sell these off for more important assets that the protocol can build upon. So I was just kind of wondering if it was just
okay, yeah,
market
I see.
and
I
Jones.
see what
Yeah,
the question.
you kind of get what I'm getting at, right?
I see what you're trying to get me to say here, intern.
I don't mean to put you on the spot.
No, you're not putting me on the spot.
Yeah.
No, it's like it's a fair point. I think I'm voting no on that proposal. Like it's a the DAO can propose whatever it wants. Like I think like I'll vote no on that proposal. I think actually like the best way for us to proceed is at least like until we pass over the meta governance rights of the treasury to the holders. The best thing for us to do would actually be to partner with another project and do OTC bribes, right? So we talked with like a bunch of different projects. The ones like I'm most interested in is like stablecoin ones. So partnering with like let's use Tribe here. Tribe probably wants to make like D3 more liquid. So they can like work out a deal with us for the next 4 convex rounds. You will get X amount of Fey, and then we can use that Fey to like farm more convex or whatever, and then we're not getting all these like unrelevant assets in the treasury that we don't really need, or we could be getting more capital efficiency out of other assets. So I think like the best path forward, which we're like trying to work out like the deal now with a few projects, is in OTC bribe situation until V2 when the meta governance gets passed to the GL Butterfly.
Yeah, totally. That makes sense. And sorry for putting you on the spot. It was just something I was personally curious about. Yeah, just moving on to the next question. We kind of touched on this already, but you were talking about wanting to diversify your revenue sources beyond just the curve war. So I guess like long term wise, I guess in 3 or 4 years. I know that's not really long term, but in crypto it is. What do you think will be like the biggest contributors to Redacted's protocol revenue? Do you think it'll still be curve wars, or do you hope that there will be other avenues that kind of take over?
Okay, I'll give you like a weird answer. I think like the best thing that can happen for Redacted is like the market accepting that governance is kind of like smoke and mirrors, and realizing that like, you know, the true value of governance is like the revenue that you can that you can extract out of it. I think like from a greater market perspective, that's the best thing that can happen for us. And more people sort of like acknowledging that and building on top of it, right? Because that only helps our narrative, and it helps place us as like a leader in that sense. For a less weird answer, I think like, yeah, I think more projects like going towards like the vote escrow token and sort of cracking that nut for themselves is probably like a good like short-term solution, which a lot of projects are doing, and we're trying to like be at the forefront of with like Hidden Hand and stuff. You know, that just opens up the doors for us to like tap into a lot of different like maybe perhaps like uncorrelated markets, and not just like depend on one.
Yeah, for sure. And for the last question regarding Redacted, I guess I'll just kind of give you an opportunity to pitch your team, I guess, or give a little spiel. How big is the team right now, and are there any like roles that you guys are hiring for?
The team, yeah, the team's like 25 people deep, I'd say. Surprisingly, I think like, yeah, I think like, you know, we probably like, I think we recognize in the infancy of a project, like you probably need people sort of leading different initiatives, and they need to be like fairly compensated for it, because like one, you know, they could just go like launch a scam or whatever and probably make a lot more money, and two, like, you know, like these, what's going to start happening this year, I think, is like a lot of institutions are going to come to play, and they're going to start seeing Silicon Valley pays and like, you know, perhaps like leave DeFi in the ditch, which none of us want. These core contributors I'm talking about. So I think like by establishing like a core like team of like 25 people, we're in like a really good spot to like hit all the different needs of like what needs to happen in the next few months. In terms of like what we're still hiring for, I think like this is an obvious answer. Like probably like devs is like, you know, I think like every project needs more devs and stuff. I see like KP's in the crowd. Shout out KP. He's like our king dev. But yeah, I mean like, you know, other than devs, I think like one thing we want to do is set up like a committee of BD business developers for Hidden Hand, so that like we can make the process easier for other projects, and sort of like deploy this like committee of people to like go source bribes for like other tokens. Okay, maybe more context for that. Like, you know, Olympus Pro, one reason that everyone uses Olympus Pro instead of like doing their own thing is because projects don't know how to manage the bonding parameters. So projects are like willing to pay this fee in order for someone else to like take that off of them. This is like how the world works. Like, you know, middlemen do everything. So for us, you know, Hidden Hand is kind of like our Olympus Pro in a weird way. And I think like one way we can make it easier for projects to like accelerate their vote escrow efforts and get more projects signed up, and more importantly, like kill off any potential competition, is to sort of like develop this like group of like really strong business developers, which like go out and like source the bribes for like a lot of these projects that like, you know, helps the token holders and stuff. So that's like the new hiring effort, is like setting up this committee.
Yeah, awesome. I think that's a great answer. Yeah, I guess kind of just moving on generally, I think we talked about Redacted enough. What do you have any like advice for, you know, the degen traders and the on-chain, you know, the degens for you know the next few months as the market gets like even more choppy?
Truth be told, I think it's a good thing. I think there's like a lot of like noise in the space, and we had to spend like, for us, for example, like, you know, we launched at like a really good time, but we had to spend like a lot of efforts just like telling the market, like, you know, we're actually trying to do something here. Like, we're not like some like scam or whatever. I think like because of the vertical we chose to build in, like people maybe made that assumption of us. But I think if we were to launch now, for example, when the market's like down, we probably would have been able to like spend those resources elsewhere, because what's going to happen is like, you know, the people that are only in it for the money are going to like filter out, because there's probably money to be made elsewhere. And we'll start to see like a lot of people that are like actually in it for the tech, let's say, start to start to launch stuff, right? So I think in general, in terms of like the whole industry like being able to like move on, or at least like handle any like extreme like volatility like price wise, it'll be easier at least to like navigate through the newer projects if that's sort of your thing, because like at least like if someone's launching at this time, like I know they're like super committed to like this idea, and like perhaps they're like us and not really thinking about what happens in like the span of like a few months, but more thinking like the bigger picture.
DCF, maybe in the interest of time, one or two more questions before we move to audience Q&A.
Yeah, sure. We can definitely skip a few questions. Okay, so even though Redacted is pivoting away from the Rebase, the Olympus model with V2, do you still think there's kind of a place for that model in the DeFi space? And I asked that even with most of the forks kind of dying out.
Yeah, I think like Olympus, like there's a need for it for Olympus, like they obviously like felt the effect of like forks and stuff in terms of like hurting their growth. I think like their model works for them. They want to be this reserve currency in theory, and in practice, to be honest, like obviously there's like extreme volatility nowadays, but the general concept like makes complete sense, in terms of like how they manage dilution through rebases and all these different things. I think like the model works for Olympus. So if you're like launching things for, and even like I think like in our V1, like it makes sense for us too, because like we wanted to like scale extremely quickly, and this was a model for us to like scale up and like get the assets that we wanted and place ourselves in a position where like no matter what happens with the market, like no one can tell us anything. Like we own this much, we own these assets, like we're here forever. So I think like it works for like really early stage DeFi projects and Olympus. I think most projects should probably shift away from like farming their liquidity pool and start owning it in general. I think that's like something people don't give like a lot of credit to Olympus to. Other assets, like unless that's like a really big focus for you, like the same way it is for us. Like I don't think there's really a need for someone to launch like an own fork nowadays. I think like through all of this, we've been able to see like what the model serves and what the model is good for. And I think like like Olympus should continue to like do what it does best in that sense, right?
Yeah, for sure. I mean, I think, as you said, protocol and liquidity is really important. And I guess for bootstrapping treasury early on for a lot of these early projects, it might still, it'll probably stay relevant for sure. And I guess we have time for one more question before the Q&A. So do you think, after managing like a 25-person team, do you think the DAO model is efficient, or would you have, if you could start over again, would you create Redacted under a company?
I mean, for us, like the whole model doesn't work without a token, right? Like BTRFLY is like a core piece of like how the the whole protocol works, right? So it branches off, like for us, it branches away a bit from just like governance, I guess. But I think like a lot of projects should like not launch a DAO. I think like there's a lot of flaws with like governance and DAOs and stuff, and I don't think like as an industry we're mature enough to like really do a DAO properly. Anyone who has like a really dope DAO actually doesn't even have a token, like who will I mention here? Neptune, like Neptune DAO. Those guys get shit done, and like they don't have a token, and they don't have to worry about like people who don't know what they're talking about like coming in and like making decisions and stuff. And like what's gonna happen with like most of these DAOs is like the people are gonna like put up like very short term thinking proposals, which hurt actually like the growth of the project. Like it infuriates me when I see like projects have to like sacrifice like so much of what they built to like do like shitty like buybacks and burns and all this sort of stuff. Like people need to stop thinking so short term. And I think like what the DAO has like sort of brought to the market is like a way for like these like short term thinkers to like extract as much value out of the token as they can in the short term and not really like try and help see the mission through. So while I get the narrative of like being decentralized and stuff like that, I think there's probably like better ways to do it. I think like the community should probably only vote on I wonder what like other people think about this. You know, like I think like for me, like the ideal solution, like obviously we're not going to do it because of like one, regulations, two, I guess like, you know, like this is not what the community wants, and three, it's probably not the best way to like navigate the industry at the moment. But I think like most projects should like be confident in what they shipped, and perhaps like only let the community vote on like major things, or just have no governance at all. You know, I think like my favorite projects are Reflexer and Liquidity, because they know what they built. You know, their system works. I think like there's issues like the stability pool rewards running out and stuff like that, but you know, like these guys know they built like a solid system, and they don't need like governance coming in and saying like, hey, like let's go buy back all the LQTY and burn it.
Yeah, for sure. I think that answer is really great. I guess what I was asking was more towards, it wasn't really like token versus no token, but yeah, it was like DAO versus, I guess, like the decentralized like governance model versus like
Yeah, well, I mean, like the
centralized
thing is,
model.
like, you know, like, so you people like make fun of like Maker and Compound and stuff like that, and like they chose to like do the DAO model and like stick to it like really really hard, and now it takes like 3 months to like even pass something through Maker, right? Um, which was the birth of like all these stable coins, because people realized like, you know, when you focus on, I guess, like governance like so much, like you essentially like sacrifice your ability to like navigate this industry at the speed that you need to, right? So there's an issue with like how fast we're growing as an industry compared to like how slow governance is in general.
Yeah, awesome. I think we can move on to audience Q&A now. Liquid, do you want to run this?
Sure. I see we have Jack D. God. I'll be approving that request now, and if anybody else would like to speak, please hit the request button at the bottom left. All right, Jack D. God, you are on.
Hey guys, can you hear me?
Yep.
Yes,
Oh,
we
thanks. Thanks for putting me up on the space. Thanks for, all I can say is thanks for hosting this space. I'm a long-term investor in both Ohm and Redacted as well. I think you guys are really smart, and the stuff that you guys are doing in this space is totally phenomenal. And to the last answer that you gave for the DAO, I totally agree. I don't necessarily believe in the DAO model, because the motivations and the incentives of the founders and the degens are not really aligned in the structure. So I'll quickly get to my question. Now, I was totally drawn to Redacted because of the curve convex model in itself, but have you guys considered what's going on in Phantom, where the curve wars or the bribes have only started to begin with Beethoven, Liquid Driver, Spirit, and those sort of tokens? Have you considered going into that chain? Thank you.
Yeah. Phantom, Arbitrum. There's a bunch of chains that like we're really interested in. I think it's important to like plant our flag on ecosystems that we like value now, before perhaps like they get to the stage that Curve or Convex is at. One of the like issues that's like been, and I think the reason I say that is because I think like Phantom will get there. Like clearly, they're like an ecosystem that has like the same values or vision, I guess, for DeFi the same way we do. The issue has been, how do we issue a native like rebasing token on another chain, which is part of the reason why with V2 there's no more rebases, because like while I think like the rebases serve like a really good purpose, you can't like we can't like go and mint Butterfly on like Phantom, because there's a underlying problem with like cross chain messaging, which essentially wouldn't allow the token to like rebase on that chain. And if we were to issue WX Butterfly, then that's even like that's like another issue, because like, you know, we're still like minting Butterfly right now for other more important issues like, you know, the liquidity and stuff like that. So I think like, you know, we talk about this like at least once a week as a team of like how we can like get to another chain. I think like one of the really dope projects like building right now is like Layer 0, if anyone's familiar. Sort of like this like omni chain that lives beneath, that has like really dope like cross-chain messaging between different layer ones. And if the token was like deployed there, for example, like we'd be able to like come to Phantom really easily, right? So the short answer to your question is like the quick way we're addressing it is through hidden hand, so that we can like, you know, come to like any protocol that we want like really quickly and efficiently. But the long term, in terms of like, you know, accruing these tokens to the treasury through bonding or like the Harbinger tax, for example, like it's a nut still to be cracked from a security and efficiency perspective.
Fair enough. Thanks. But just last question, follow-up question. What do you think about the overall Phantom chain, considering the TVL there is and how the market share has been taken from Ethereum in the past year and how the Phantom has grown?
Yeah, I think Phantom's dope. If we could deploy there today, like we would. Yeah, I don't know, like, you know, like Phantom's dope. Phantom's
Cool.
dope. I use it all the time. If that's
Cool. Thanks a lot, guys.
Thanks, Jack.
Great. So we'll give another 10 seconds or so here for anybody to request to be a speaker. And in the meantime, I'll just give a little plug for InternDAO. So for those unfamiliar with InternDAO, we're a group of interns with diverse experiences whose mission is to have fun, share alpha, and build a decentralized future with friends. Personally, it's the best Discord group I've seen to date and feel grateful to be a part of it. And if you'd like to join this collective of incredibly talented people, check out the pinned tweet on InternDAO's profile. Sami, it was absolutely awesome to get to talk to you. You're a great speaker, really clear when you're talking, and just huge kudos to the entire Redacted team for building this incredible project. I'm excited to see what you guys come up with. Doesn't look like we have any speakers for now. So again, thank you all for attending and really appreciate it, Sami.
Yeah, appreciate you guys for having me.